C3.Ai stock is in a strong bearish trend. Its 200-day moving average is sloping bearishly lower, and I think the broader market weakness. It's not only the reason why it's been losing ground. It started to lose ground even before all of these issues arose. Before then, the 200-day moving average had started to slope bearishly lower. So we have a couple of indications here. As things stand right now, um, the deceleration in its momentum, that is relative to its 10-day moving average, is beginning to decelerate. It's as you can see now, yeah. It's before now. I mean, of late, it just started to slope downwards. You can see that, so the algos are projecting that that weakness, that deceleration is going to slow down. Probably the reason why we have that it's going to print a bottom by the 22nd of April or thereabout. That is the decline in that moving average. And we can even see here the predicted momentum is more of an acceleration. You can see, so this price of pressure momentum, it tends to measure this sort of angle of attack that a certain moving average has. So in this case, it's the moving average, is the 10-day moving average. So it is predicting that it's going to accelerate. So even though the algos have not projected any, it doesn't have any upper projection, nothing in terms of price, nothing there at all. Rather, it has downward projections, and they're really, really deep. We have 8.41, 2.5, and even a negative figure. Obviously, negative figure will result into fractional figures. So that will be a negative 1.15. That will be really deep. I'm trying to imagine what sort of price that will be, but there isn't. It's a mix of things here. So weakness is to some extent. I mean, the lack of upper projections, you can say, is not convincing. It's not convincing enough. Yet at the same time, there's also a projection that the moving average, the 10-day moving average, will begin to accelerate. And of course, the 10 moving average can accelerate on its own. It doesn't have a life on its own. It takes life from the price itself. So it is a mix of things. So, but we can have a look um, at the weekly chart and see what can be inferred. Let's have a look at the weekly chart. Let's see. I have to modify the 10 moving average. The 10. I have to modify a few things here so that we can see. This is 30 days. Okay. For some reason, it's not projecting. We don't have any projections. They're not projecting further. But here we have interestingly enough, we have upper projections here. 18.48, which is okay. That's 18.48 is below where it is closed at as of Friday, the 4th of April, and then 15.49. But there's an upper projection, 23.32. Okay, so here what we can do is we can find a trading range for the week that will begin on Monday the 7th. We can find a trading range for that week, and maybe it might help us to just get a feel of things. Let's have a look and see. We'll use this market grid finder. Yeah. So that is applied now. We come here and then we take the data. Down here we'll see it has a trading range of between 19.8. It's expecting the range to be between 23.82 and 19.8. You know, but it seems it hasn't taken into account what happened on Friday, the yesterday, the 4th of April. So because we are this figure of 19.8 is supposed to be indicating that I mean the price is already below that. So well, it doesn't really follow. It doesn't really follow. But what it's indicating is that if it falls below 19.8, maybe it may begin to consolidate, and then maybe if the probabilities look right, then it may be a buying opportunity. But in this climate of rebalancing that the U.S. government is pursuing, I'm not exactly sure that this will be the best time to begin to buy up. Indeed, it could be. Because already things are already down. But left to me, I would say maybe not the best time to start buying. So yeah, let's see now. Any point having a look at the monthly chart? We could still do that. Let's see now, monthly chart, and we could equally have a look at the data as well. The trading range for the month. That is 1 month from Monday the well, it depends on how it calculates the months. I'm not exactly sure. It's I think no, it's just calendar month. So at least for the what is left of March, yes. So it has a trading range of between 29.50 and 12.6. So we're getting a picture of things now. We can see now we have even lower prices here being projected on the monthly chart, and we're also having a sort of consistency in terms of upper the top of the range of prices. We're having some consistency in that regard. So the fact that we have seen this 12.6 dollars, which is probably the lowest we have seen in terms of ranges, and or may also relative to where it's currently trading at right now, it gives you an idea that maybe or maybe unless because because we know already that there's weakness in the market and it's likely to continue. It's well, you can't really divorce what you know. You can't really divorce what you know, but at the same time, it can be good to isolate what you know so that you can analyze things in a different way. Okay, so let's get back to the daily chart and see back to the daily chart and have a further look at the we can have a further look at the other price pressure momentums, especially for the 21-day moving average, just to get an idea of what's going on there. What's going on there? And remember that the algos are projecting that this 10-day moving average, its this deceleration is going to its weakness is going to decelerate and then also begin to pick up as well. To some extent, there was a validation in that regard because we can see that prices may begin to pick up, and to some extent, you could say, yeah, maybe it's the if anything, the projections tend to align to some extent. So I can just quickly print it out. Do that again. So this is okay. For some reason, I have okay. I'm gonna have to modify this again. I have to modify it so that we can get. It's currently projecting only how many days? 10 days. Projecting only 10-day future bars. That is projection of only 10 days. But I'm want to extend it to 30 days. Okay, it's there now. As you can see. Supposed to okay, well, in any case, it's there. I believe this is what we did. For some reason, it's giving us a different a different figure altogether, totally. You and I saw that earlier on. Let's see now, getting a bit funny. Okay, yeah, yes, more like it. Yeah, that's it. We have it there. We have an acceleration to the upside. Yeah, that's faint. This is quite faint. This is it's accelerating upwards, but I'm going to try and thicken it. Let's see now. Something thicker, something darker. Yeah, a lot more dark. So yeah, it's just like the projection of the 10-day moving average. It's projecting acceleration to pick up. Yeah. So let's have a look at the that of the 40 of the 21-day moving average. Okay, we have to adjust this as well to give us future bars of 30. Right now we have 10. Visibility. I think some of them are thin. I think okay. Yeah, you can see we have yeah, same as well. Pretty much the same as well with the 21-day moving average itself. It's indicating that strength will pick up. Strength will pick up. This is from exactly from here. From yeah, there's a correlation there. They are in alignment. So from the 5th of early May, 5th of May or thereabouts, to pick up. So it's also interesting to have. It should be good to have a look at the hourly charts because it also gives you a granular idea of what things how things are as well. Here we have this is for the 21 period moving average. Here we have some stabilization by the 10th of April, and then things will be a stabilization. Some at least the bottom will be printed by this Wednesday. It's indicating based on this 10-day 21 period moving average, and then after that it will pick up and then stabilize. Here as well, there are no upper projections. There are no upper projections. Okay, let's see now whether we have any on the 1 hour chart. Let's see any upper projections. Okay, here we have upper projections. We have what do we have? We have let's get it. We have 21.06, 19.72, 20.33, 20.70. Yeah, that's what we have. It's and especially this one has continued to be it's continue the emphasis is quite a strong one, 20.70. The emphasis has been it's been the iteration of that emphasis began on the well yes just began on Thursday, the 3rd of April. Yeah, C3.Ai. This is the 21 period moving average. Is strength. You can see here, strength is it's quite ambitious here. Quite the projection here is quite a bullish one. So let's have a look at the 10 period moving average, the momentum indicator. Let me adjust, and then future bars. Make it three. Make it 30. Yeah. Okay. This is for the 10 period moving average. Okay, the 10 period moving average is it's expected to decelerate. The momentum is expected to become weak. by Monday, and then after that stabilization. But this is an hourly chart. But the interesting, the encouraging thing here is that we have these upper projections, and but coming back on the daily chart. On the daily chart, we have there are upper projections here that are not in play. So this is also this might be is a if you like, they may still come into play if things start suddenly change because all of these indications are just based on what has happened and some other news about it and the environment and the present situation right now. Yeah, it could change more. They could begin to print out. They're not currently in play at the moment. A few days ago they were in play, but the algos are not not reviewing them. Hasn't reviewed them. Not using them anymore. Not calling them up. So but the projections are that things might improve in a very short time up till Wednesday, up to Friday the 16th of May. So fingers crossed, fingers crossed. Fundamentally, things are quite not that bad for C3 AI. Yeah, okay. Have a look and just know how you're getting involved. It's not the market is not weak at all. It's not strong at all. Some are saying this is the time to be in cash. This is time to be in cash. 70% cash and 30% assets. So thank you very much for watching this video.